Today, the LIC IPO has started. There was frantic activity for the last few months for this highly anticipated IPO, which was to divest a much larger portion of the Government of India's stake in the LIC. But ultimately, given the market conditions and continuous evaluation of the success factors that are essential to be taken on board, the Government of India has now reduced the IPO size, and today the LIC, which is valued at rupees 13 to 15 lakh crores, is likely to divest around 20,557 crores by divesting the appropriate amount from their own kitty, because they own 100% of the total shares of LIC. For our viewers, it is important to tell them that an IPO of this size, which is touted as the biggest IPO ever in Indian stock market, what we need to look at. Obviously, Life Insurance Corporation as a insurance behemoth, which was created by amalgamating various life insurance companies under the Life Insurance Corporation Act, today, in spite of allowing a large number of private insurers, enjoys a market share which is twice the size of the market share of all its competitors put together. In other words, it has about 2/3 of the market share. What is the criteria, as I told you, for looking at when you are looking at LIC as an investment opportunity? The first thing that comes into mind is that whether at your age, whatever is your risk profile, how does it compare with other competing asset class? Nearly 2/3 of India's money is in bank deposits, and remaining are in real estate, in stock markets, and in gold. If we look at other competing asset products, the security part of it, the growth part of it, and the ability to encash it at some amount of reasonable profit in the near future are the important criteria. When we look at LIC, we will have to look at the Indian economy in general, because large corporates such as LIC are proxies of the Indian economy overall. We will have to look at insurance as a segment. What are the growth prospects? And if you are not just a short-term profit maker, obviously you will look at in 3 to 5 years' time how much profit or how much gain that could be there for an average investor who want to keep it as one of the safe instrument, because even after the divestment, Government of India will continue to hold over 90% of Life Insurance Corporation of India. To that extent, it will have a sovereign guarantee to perform. It will not be allowed to go down. And how much professionalization is required, how much insurance penetration is there, that is the industry overview. So if we look at the basics, just to recapitulate, it will open on 4th May, it will close on 9th May. The price band is 902 to 949. Policy holders will get it at 889 rupees, and retail and employees will get about 5% discount, that is about at 904 rupees. The Government of India, which is selling, has the objective that it looks at more professionalization and discovering of the market value for further divestment, because Government of India's divestment is supposed to be an indicator of the reforms of releasing government's hold on leading public sector organization. If we look at the industry prospects, India is a major economy. It is supposed to grow at least at 6% rate and up to 9% rate in the next 5-year time horizon. This is much higher as compared to even China, which is projected to grow at a median level of roughly around 5%. And of course, it is much better than United Kingdom and United States, which are likely to grow between 1.5 to 2%. So growth-wise, Indian economy is providing a very sound platform for Life Insurance Corporation to grow. If we look at factors which impact the insurance industry, first is the demography. The demographic advantage of India, in which a large number of people, out of our total 1.2 billion people who reside in 245 million households, this is likely to grow to around 376 million households by the year 2031. So median age being 28 years, large part of these population will go into productive age, requiring much more insurance coverage. Even today, the insurance coverage is very low in India, but this is likely to grow much farther because of these two things. One is that with demographic growth, more prosperity will come and people would like to insure their lives. Second is the urbanization. Once urbanization comes, there will be substantial investment. So sustainability of the income levels will grow, and the Indian urbanization is likely to grow by 37%. Similarly, there are other extenuating factors for any life insurance corporation, like insurance providers, going into a decline, because the other is the per capita GDP, which is at a particular level. Even for a small total GDP growth, is likely to be multiplicated in the per capita GDP growth, and it is expected to grow around 25 to 29% range. Now, for the LIC, which is a market share of 61.4%, and it has a 9.16% growth, which was new business. In the new business segment, the 9.16% is the next competitor. That is 61% LIC and 9% is the next competitor for new business premium. So LIC, which is a great track record, only complaint could be in terms of improvement in servicing. LIC has invested heavily into digital transformation and claim settlement, innovating and customizing products. Some of the products which has come in the recent past are very heartening, and it is matching feature for feature with large number of private insurance providers. It has deep pockets in the sense that the current base has a lot of good quality investments from the insurance premium, in order that they will be able to pay good bonuses and good returns on maturing policies. Efficient underwriting and cost management. It's very frugal. It has old values. It because of its stature, it gets at a discount large number of investment opportunities, and it gets to see them. And so the deployment of the premium for investing in growth will be very efficient, and Going forward, the unit-linked insurance product segment and the other profitable segments are likely to be added. Product innovation is likely to be added. So net, Life Insurance Corporation is not just a big IPO that is coming in our way. You can invest right from around 10 to 15,000 rupees to up to 2 lakh rupees, and with limitations in multiple accounts too. This is good investment. The current price that is being offered is very, very attractive as compared to what has been offered in case of other ones like the SBI Life Insurance. So overall, from industry prospects, from the analysis of the company per se, the economy, the industry overview of the competitor, it is a recommended kind of a stock. Any kind of investment in this is expected to provide good returns. The insurance segment is poised to grow, but make your own due diligence. These are only tips to help you to decide it. But there are also people who believe that LIC like things may not grow that rapidly. So may not be an immediate short-term magical return providing stock, but in a long term, it will definitely provide value. Thank you very much.